Hello traders, quite convenient. We can record a rolling of a call credit spread, which some of you have been asking for in the group. So this is a great opportunity to do that. The one we're looking at is Microsoft. You can see here, this 470, 472. The price has run up really strongly today, and that's okay. There's a couple of things I want to check before I roll. First one is, let's just jump back into our chart that we normally look at, just to see what the flavor is of what's going on. If we look at Bollinger, we can see up here that it is about to break through the top of the Bollinger Band and hit an all-time high. If we look at our RSI down here, it's super interesting at 75. So we are looking at overbought, definitely, 75, starting to get a little bit warm. We're looking at top of Bollinger. Let's go back to our Robinhood UI. So my feeling is Microsoft's getting a bit warm. The market doesn't like to run up too much without a correction. So with that in mind, let's think about how we want to handle this trade. Ordinarily, I would wait until the last hour of trading. We're just after midday, but I want to get this video out to you early so you can decide what you would like to do and you're not going to be panicked getting on for the close of business today. So the first thing we're going to do, we're going to come over here and we're going to have a look at view all options. And when you want to roll a call credit spread, you literally reverse what you have done to open the spread. So this credit spread is expiring today. So we can come up here. Here's our expiration date. It's today. And we can leave that as it is. We can look at the options chain and we can see that here's our sell leg, our 470. We open that up. We can see that if we want to buy that back, it has a cost of $1.10. So let's buy that back. We can close that up now. And then we want to sell our long leg. This is our security leg, our 4725. And we can see that there is 5 cents value in that. And then looking up at the right hand side here, you can see that leaves us with a total cost of $1.02 per contract. And we have 2 contracts. Okay, so we've reversed what we did to open the trade. Now we're going to choose a new expiration date. With credit spreads, I like to go out as short a period as possible. If you're a bullish trader, as I am, I believe the market goes up over time. Therefore, if I'm in a call credit spread, I do not want to give the market too much time to allow the price to continue to rise. So that's why I'm choosing 1 week. And what we do now is we now open basically a new position. So we're going to sell a call. Now we could sell a call at the money. I mean, we could stay where we are. If we open this up, we can sell the 470. And if we look at the delta on that, we can see the delta down here is 0.55. That's telling me there's around a 55% chance that by expiration, June 13, we could well be in the money. I don't want to be in the money. But let's just look at this trade anyway. Let's just say we were to say, okay, we will sell the 470 and then we will buy the 4725. So we're basically just keeping the same trade. And then we can see that over here we have a credit for that. We have an 11% credit, 6 cents, it's moving around. Okay, there's a small credit and we're staying at the money. I don't think, I'm going to undo that. I don't think that Microsoft is necessarily not going to go to 470. I think it might still continue to run, and I think 55% chance of that is a little bit too much. So what about if we decide to sell something a little bit higher? What if we sell the 475? We're getting less money, it's $2.16, but look at our delta. Delta's a much more reasonable 0.34, 34% chance of going in the money at expiration. And there's plenty of volume an open interest, which I like. So let's have a look at what that looks like. So we can sell 475. Now we need to buy our long support leg. We can buy that at 143. And we can see now there's a cost of 39 cents. I don't really want to pay. I want to preserve my premium. I'm always fighting to keep premium. So here's what I'm suggesting. Now you could do any of these, but this is what I'm suggesting. I'm going to open up the width of the spread to $500 and look at the 88 cents. So by opening up, I can turn a loss or a debit into a small credit. And that's what I'm going to try and do. You guys can choose what you want to do, but I think I'm going to go with the 475, 480. I'm going to open it up to 500. I'm going to now continue. I'm going to select 2 contracts. And now I've got to look at this bid-ask spread. I'm not going to get 25 cents. So the credit of 49 is unlikely. So I'm probably going to have to do something else. Let's see where we need to go for this. If I go for the 1.6, I'm going to get a high fill likelihood. And I could play around with it. I'm not going to. I'm going to try and get filled at that. I'm going to try and get my 31.65. I'm going to hit review. The collateral I'm adding is $500. I'm going to get a credit. I've got 2 contracts. I'm going to submit that trade. Okay, it's now been filled, so I can hit done. And you guys can choose what you would like to do. Go out of the money, maybe get a very small credit, maybe go a safer distance out. We talked about that, the 475, and have a narrower 250 spread and pay another small debit, or you could get in credit by widening the spread. I'll let you guys decide what you would like to do. I've shown you what I like to do with call credit spreads. I'm always fighting for premium, and going back to looking at our Bollinger Band, is it really going to bust through the top of the band and stay that high all through next week? No one knows, but the technicals are telling me it's not a bad risk to go with 475, 480. Thanks for watching. I hope this has been useful, and I will see you in the next video, and have a great weekend.